once I knew how to find investments, then I could monetize, a strategy. And I went into his office and he gave me a bonus that was like, a six figure, like, to me, it was like totally life changing. Like, I went to my dad, I paid my dad off, and my life was never the same. I've been on the verge of bankruptcy. I've gone through really difficult times. And I was speaking at University of Chicago last week, and I told the kids, I was like, you grow the most and you gain the most perspective when you have the biggest setbacks. So you got to be thankful for the setbacks. You got to be thankful for the bad experiences that happen to you, because at the end of the day, that's when you grow the most.
Hi, my name is Jason Raznick, the CEO of Benzinga, and welcome to the RazReport. As always, before we kick things off, I want to quickly tell you about what Benzinga is. Before I started Benzinga in 2010, there were very few places to get real-time information on financial markets. I thought it was unfair that Wall Street had access to this information before the average Joe investor. So I created Benzinga to level the playing field for you, the retail investor. Benzinga is for the people and by the people. Now, let's dive into the show. All right, welcome to this week's edition of the RazReport. Very excited to have an old friend on the show. This is actually exciting because I knew him before he started his company, and I always like that because a lot of people start companies, don't follow through on them. They say they're going to do it, and they don't follow through. That's actually 85%, 95% of people. And this guy followed through, raised money, building a great company, great investors, great properties. It's called Iconic Equities. And the guest we have on today is Tim Bishop. Welcome to the RazReport.
Hey, thanks for having me.
See, I get in the mode, man. I just get in the mode, you know? I know. We're just talking, then all of a sudden I'm like,
Good
ready.
voice for radio.
Yeah, exactly. A face for radio. That's right. So can you, Tim, we'll get into your life, but we're going to talk about business first a little bit. So I know you're in the real estate sector. I remember when you started Iconic Equities. Give us a little brief overview of what you do.
Yeah, I mean, so we're an industrial buyer and developer. We're headquartered here in Miami. We've all got industrial backgrounds. We worked at some larger development shops, Exeter. I was at Thor Equities. I've had guys from Prologis. So yeah, I mean, that's kind of the long and short of it. And then we verticalize the various strategies within industrial. We just bought a cold storage asset a couple weeks ago. We do industrial outdoor storage. We do light industrial and shallow bay. We do warehouse development. That's more class A and stuff that would be more geared towards like e-commerce tenancy, Amazon and Walmart and stuff like that. And then the full gamut, the class B stuff is just a little bit smaller, more geared towards mom and pop tenancy. But that stuff is actually kind of the hottest part of industrial, just because of the supply and demand imbalance. So we're super focused on the shallow bay front right now.
So, I mean, that's all different types. That's cold storage, outdoor, shallow bay. What is shallow bay?
So shallow bay is basically like when you look at some of these industrial assets, it really comes down to the tenant sizes. So the assets in shallow bay are geared towards smaller tenant sizes. So call it sub 10,000 square foot tenants, as opposed to like big box would be like a 700,000 square foot warehouse that would be like in Atlanta or like South Dallas. That would be more geared towards e-commerce tenancy or Lowe's, Home Depot, kind of the Fortune 500 credit tenancy. Shallow Bay is at the opposite end of the spectrum. It's smaller tenancy, usually geared towards population growth and servicing population growth. So we're mostly focused on like the population growth markets, like we're headquartered here in Miami. So that's kind of where we're mostly focused. And coincidentally, that is probably the best shallow bay market in the country.
So how do you become like an expert on all this stuff? Like on like so you're doing cold storage, shallow bay, like cold storage. So I'm here in Michigan, and there's a company, Lineage Logistics, and I know they do a ton of cold storage, or they need a ton of cold storage. I don't even know how it works, but how do you like know like price per square foot of all these different types? I mean, is industrial just so specific? Because you're not doing apartments, you're doing all industrial,
Correct.
and you're able to figure out like this market commands this, cold storage is this, just through years of experience.
It's funny. We actually kind of fell into the cold storage niche, and we really only bought one asset so far. We closed on it a few weeks ago, and it's in Miami. But we we're in the process of just sourcing infill industrial deals, and it just happened to be one out of the 40 cold storage assets that are in the market. So when we really leaned in on just price per square foot and what it costs to replicate this asset. So for a cold storage asset, it would be like $500 a square foot to rebuild that asset. And we are like, man, we're buying this thing for like less than half of replacement costs, and that's one of our favorite metrics, in acquiring real estate right now. Because at the end of the day, cap rates and interest rates are transient, but your basis and your discount to replacement cost, like that's kind of forever. That's where you really lock in your value is on the buy right now, because I don't have a crystal ball on interest rates. I don't have a crystal ball on cap rates, but I can, reasonably control two things. And that's, my basis, and then what yield I'm getting to and by what year. And I can't really control it because obviously leasing can tamper down and the market can soften, but I have a pretty good idea of within a couple of years where I'm going to get to, assuming that like the world doesn't, drastically change again. So, obviously our calculator has subtracted quite a bit of value over the last 12 to 18 months if interest rates have ticked up. But to answer your original question, it's more about knowing the market, and what services, like what tenants service which population. For South Florida, since there's only 40 cold storage assets in the market and it's $500 a square foot to build, chances are there's not a lot of new supply, and that's going to create upward pressure on rents and ultimately upward pressure on values. So that's how we got our arms around it. Would I do cold storage and roll out a full-on vertical across the country and nationalize the strategy? Probably not right now. I'm more focused on traditional light industrial. It's a larger addressable market. It's easy for us to get our arms around. We really want to build something out that's got enterprise value on the back end. So doing leasing and management, in-house, potentially in that strategy, and trying to gain a competitive advantage there. Because, whether you're doing cold storage or big box development, it's all about it's all about where's your competitive advantage and what's your talent best geared for. And
Well,
yeah, go.
yeah. So part of what I find very interesting with you is I met you before you started Iconic. You said you were going to start this thing and this idea for industrial, but also you're very networked. You know a lot of people. Maybe you're a likable guy, or maybe you're not likable, and people just like to hang with you. I don't know. I'm just kidding. But you're a likable guy, and you're very networked. Does your network help you in finding deals, or is it how? I guess how do you go about finding deals?
It's a good question, and what I will say is like a little bit about my background, and I think that's a good segue. Is I, there's certain kids that come out and go Ivy League and then do banking and then private equity and then start their own real estate fund. I was at the opposite end of that spectrum. I did not have that kind of trajectory. I had a bunch of career failure in the beginning. Like I came out of college, barely graduated. I went to a pretty good school, Loyola, Maryland. But I didn't, I had like a liberal arts education. I didn't have the technical skills out of the gate. It's not like I studied accounting or finance or something like that. So it's definitely behind the eight ball as far as that goes. I did not have the technical skills. I was pretty good on the networking side of things. And look, a lot of people go back and get their MBA just for the networking or just for the technical skills. So I kind of had to figure it out on the fly, and it led to a bunch of career failure in the beginning, which was ultimately the best thing that could have happened to me. So yeah, I mean, my first job, I was like doing like social media marketing, and then I was working at Merrill Lynch making $12 an hour cold calling, and then
How long did you last there doing that?
5 months. I didn't set up one meeting. Uh,
Not
then,
one.
then they hired. Then I became a financial advisor and didn't bring in one client. They fired me too.
So
So
wait, 5 months. Hold on, 5 months of cold calls, and then what'd you say? And then you
I
became a
didn't set
financial.
up one meeting, and then I didn't bring in one client. And it's not. I just didn't know how to sell. I just and I didn't have the technical skills. A lot of kids come out of school, go the analyst route, know how to underwrite, and they're like equipped to work and be a meaningful member of the workforce. Whether it's in real estate finance, private equity, venture. I was not that. I was just like kind of a personable guy. So I figured like that was a pretty good route to go because I did want to get into finance. I did want to get into real estate. So I was really in finance sales, at the end of the day. I guess I just, wasn't very good at it. I passed the tests, but, um, you know, you, like I was like 25 years old at the time. Like, who's going to invest with you? Like, what's your advantage in the marketplace? Like, what's
Right.
your investment thesis? I didn't have an investment thesis. At the end of the day, Merrill Lynch is like, okay, invest in the S&P and we'll take 1%. Like that's not an investment thesis. Nobody finds that to be a compelling strategy. I
So what
knew
was next after Merrill Lynch? That's
after Merrill Lynch, I worked at a real estate tax firm. And
in Miami.
yeah, because I wanted to get into real estate, but like I didn't really know how to go about. Like I didn't have any sort of analyst skills or anything like that. So this is like a sales role, but I knew that it was like a step into real estate.
Yep.
So I was like 25, 26 at the time. And after like 6 or 9 months, I used it kind of as a launching pad to get an actual job in real estate acquisitions. Okay. Working for a guy that did a lot of like non-institutional deals, acquiring like he's doing like high street retail in Wynwood and stuff like that. He actually did pretty well, but by the time I got there, it was kind of a challenging part of the market, and he was kind of shifting strategies like from retail, which was doing incredibly well in emerging neighborhoods. I don't know if people remember 6, 7, 8 years ago. Like that was the hottest thing. Like, where's the next Williamsburg? Where's the next Wynwood? Where's the next, um, East Austin? So that was, kind of as strategies were shifting. And I only found like one small deal for him. And he was like, this isn't going to work. And he was like, you should become a residential real estate broker. And
Mm.
I was like, oh my God. Like, I mean, look, residential real, like a lot of people do very well in that, but like I wanted to be in commercial real estate, and this guy like just dropped the ultimate insult on me, like, hey, you're just like not good enough or just not cut out for this. Like, I don't know which, but you should, consider something else, that you're better suited for. So at that point, I was like, all right, I'm gonna go and get my MBA, and in the meantime, I'll apply for schools and I'll apply for jobs and see if I can land like a junior acquisitions role. It was like 26, maybe 27 at the time, probably 26. And I was applying for jobs left and right. And at the time, by the way, like I had no more money. Like my credit cards were maxed out. And, this guy wasn't really paying me that much. And he it was like the end of the road for me. I was going to move home, leave Miami. Like things just didn't really work out. I'm going to go back to the drawing board, go back to school, and actually develop technical skills. Maybe try and get in like one of the New York schools, NYU, one of those, and try and figure it out, but ultimately move home. And I at the time was just networking with people that like I knew did well in real estate, and there was a guy named Scott Sherman who worked at this big company in New York called Thor Equities, and he started his own shop. And at the time, he was like mentoring me a little bit, trying to help me.
He started his own shop at Thor or another one.
No, he left Thor and
Okay, got
started
it.
his own company called Tricera.
Okay.
So he was like a year or two into this new venture, and I like really looked up to him. And he was like trying to help me get a job. Like he wasn't really, but I wasn't really that hireable because I just didn't have the technical skills. Like when you're sourcing investment opportunities for folks, like you should be pretty seasoned. Like the folks that I try to hire or work with, like at this stage, like you really want them to have really strong technical skills, really strong, sourcing abilities, where they can value real estate like almost to the $100,000. Um,
Yep.
so, at the time I didn't have that. So this guy was helping me find a job, and he just so happened to be meeting his old boss, and his old boss, who's a real estate legend, who I only would see in like the real deal, named Joe Sitt, was like, "Oh, do you have anybody in Miami that could source deals for me?" Because he did it incredibly well for Joe, and Scott, he made him a lot of money,
Yep.
and he was
Scott
looking for
Sherman.
yeah, he was looking for somebody like that, and out of nowhere, I get a call from like Thor's HR department, and they were like, "Hey, like, we came across your resume, we came across you or whatever, and Joe Sit wants to meet you in like 45 minutes." And I was like, "The guy in the real deal, like the guy that's like owns like billions and billions of dollars of real estate, wants to meet me like in 45 minutes." I met him in Brickell, like I left the office and I was like, this is crazy. Because, he's like one of those pillars in the real estate community. He's a pretty big name. So I was a little starstruck. And, at the time, like, he was like, what neighborhoods would you focus on? I really want to buy in Miami and this and that. And, he hired me like a couple weeks later and it changed my life forever.
Did you like go to lunch with him? Like how this happened?
Yeah, we went to lunch at Brickell City Center. His friend owned one of the restaurants, and actually, I met the guy coincidentally a couple years later. He owns Cantina La Viente and a few
Okay.
others. They were partners on Joe's like Mexican operation on some F&B stuff. But yeah, he hired me, and then that's one thing. Like I got hired. Now I get this chance to work there, but I get there and it's all like Ivy League educated, like Cal Berkeley, like everybody's like really sharp, like New York talent, like solid, and I was definitely, behind the curve a little bit because I need to now develop the technical skills, learn how to work at this company, and then actually succeed and produce and bring deals in the door. So in the first 6 months, I didn't know which way it was going to go. Like I was like, it's probably not going to work out for me. I'm going to wind up like going and getting my MBA. And
Yep.
then somewhere along the way, like I had a couple people mentor me at Thor that were like, just guiding me like, hey, you should go to this market and check out Austin, Texas. You should go check out Nashville. You should get on a plane. And I was like, you know what? If I just get on a plane like every week and go hunt for deals, like and just out hustle people, like chances are this is going to work out. And it started to. Like in my first year, and by the way, like when my credit cards were maxed out, I should say my dad was going through a divorce from my mom and took out a loan against his 401k because he didn't have any money and paid off my credit cards. And after that first year working for Joe, I walked into his office and I found two deals. They were like 90 million total. It's like, pretty good year for someone, that didn't have much of a resume before that. And I went into his office and he gave me a bonus that was like, a six figure, like to me, it was like totally life changing. Like I
Yeah.
went to my dad, I paid my dad off and my life was never the same. Because once I knew how to find investments, then I could monetize a strategy, and that kind of like set this trajectory in motion of like, okay, if he trusted me to invest in me, then others will as well, as long as I'm rigorous in my underwriting and rigorous in my my diligence. I can translate this into something. And the next couple years we did extremely well in the deals that I found him. He was pretty satisfied. So it was tough to leave,
Well,
after.
that's what I was gonna say. Like, it's Scott Sherman used to be there as well, right?
Mhm.
And then you were there, and then you left after how many years?
Almost four. It was like 3.5.
And so you said it was tough to leave because why was it tough to leave versus going to do your own thing?
It's always tough to do something entrepreneurial, especially when you're, making good money, working at a big company, working for a legend. And he's a very, very likable guy. I was hanging out with him a few months ago in Miami. Like, he's a lot of fun. I'm friends with his whole family. They're really good people. He's Syrian, so I'm friends with a lot of the Syrian guys that are all in real estate. So yeah, it was tough, but and same thing with Scott. Like it gets to a point where you get that entrepreneurial itch, and you're like, I feel like I could turn this into something. I could parlay this into something. Like it's almost like you're betting on yourself at the top. I just did really well, and now I want to parlay it into something. And at that point, in those few years that I was there, it was a short period of time, but I learned so much. I learned.
Yeah. But what I guess I wonder a little bit is, you learn so much, learn how to value a deal. You found deals, you close deals, but you get that itch to go on your own. And you were working for a legend. He has a great company. Is it ever like a conversation like, all right, you know, maybe like so? There's a guy, Citadel. It's a big hedge fund, or not Citadel. There's another one, Cubs. Julian Robertson. He was a hedge fund, and then people left there and started their own hedge funds, and they were called Cubs. So Julian would become the biggest investor in the like. I don't know. I just don't know. It's because it is when you're working with a likable guy. He taught you so much. I mean, that makes it even that much harder to leave and do your own thing. So I guess like you go have that conversation, and then it's just like you want to go do your own thing, basically.
Yeah, I mean, look, it's a family business, at the end of the day, and sometimes, at the family businesses, you know,
Yep.
it's tough, it's not like I had like a ton of equity in the deals. Like, it was, you were well compensated, but, I wanted to start a company where like everybody had a vested interest, on fees and promotes and carry and stuff like that. And that it wasn't really like as much monetary of a consideration. It was more like, I want to start something where I can have more of an impact out there. I feel like I could parlay this into something, and not to sound cheesy, but like, you know, create a platform where, I can not only attract a pretty strong investor base, but, at the time, like I had this kid that was like shadowing me and I was teaching him real estate. And before that, he was like working at a hedge fund doing like sales. So he was a pretty reasonably intelligent kid. And I was like seeing like how much this kid was growing, just by like having conversations with me. And then he was regurgitating it, and it was like institutional investor appetite towards certain, strategies within industrial. And all of a sudden I'm like, I could put this kid in the room with like an LP right now. I could put this kid in the room with a broker. So I started to see that I was having this impact on somebody. And that to me, like, look, money is a very, it's a transient thing. It can come and go, but like the impact and your legacy, is something that can last much longer. So, having an impact on other people is probably a big motivator for me, young folks. So, like recently, I've been speaking at a couple different universities, and like it's the best feeling ever. I spoke at, Harvard a few months ago, and then I ended up hiring a girl that's interning for me now, and she goes to a liberal arts school, so like similar situation. I know it's Harvard, but like they don't teach you real estate and finance there, and she's growing and learning so much so quickly. And to think that like one day
You have a Harvard intern.
I do, yeah.
Did you ever think you would have a Harvard intern? That's pretty cool.
No, you're right. I mean, I could say 20 things that I never thought I would have that I have right now. I mean, think about that.
What's one more thing?
Yeah, no, I mean, I,
Well, no, give me one more thing. You said I'm putting you on the
oh,
spot.
one,
What's one more thing? You said the Harvard. You never thought you would have a Harvard intern, and then what's one more thing that you never thought? Like,
I probably never thought that I'd have a company. I'd never have like institutional investors. I never thought that like, I mean, think about like
yeah,
where I started,
yeah. I mean, you're right. You're right. You were working.
I was trying to like
Um,
not
uh,
declare bankruptcy not too long ago and figure
you,
that
you,
out and just get my first job. And then it was like,
and I mean, you were making cold calls at Merrill, didn't one deal. Social media. Now you have your own company. A sweet name, Iconic Equities Group. I love the name Iconic. That was like having me at Hello. So we're gonna fast forward. Well, I guess we did fast forward, but you're like actively still doing deals right now. I've been told the real estate market is not maybe at a standstill, but pretty slow because of the high interest rate environment. How do you combat that?
yeah, I mean, look, in real estate, like John Gray was saying from Blackstone, there's haves and there's have nots. Okay. There's a total standstill, on demand and valuations on office, obviously. Like that is getting crushed right now. It's not financeable. It's very tough. I was in somebody's office yesterday that was like, an institutional investor. and they were saying that they actually are kind of like a hybrid. It's private capital, but they operate like in an institutional capacity. So they'll go to their network of high net worths, and then they'll allocate into deals. And they were telling me that they were going to buy a deal that was a 9.5 cap and a 14 cash on cash, and they couldn't raise the money for it. And that just basically tells me that no matter how good the returns are, no matter how good the asset is, office is just like impossible right now. Retail similarly challenged, but I do, anecdotally have friends. I was in Sterling Organization's office the other day. They told me they're a big grocery anchored retail buyer. I was with my buddy whose family owns Gator Investments, which is a big retail buyer as well yesterday. They were telling me that their portfolios are holding up very well, especially the grocery anchored stuff, and the stuff that's more F&B or experiential in nature. That can't be affected by e-commerce. Multifamily is challenged, I think, because of basis, and that's my biggest focus right now is basis and getting to positive leverage. So, and what I mean by that is like, in order for me to buy a deal right now, like I need to be going in at an okay cap rate, but I need to be getting to a stabilized cap rate by year two or year three that's over neutral leverage. Your borrowing rates all in are like 7% right now. So I better be getting to like, a 7.5 or an 8 by year two and be in positive leverage territory so that there's that arbitrage between debt and equity. Because that's why multi was so challenged, is that a lot of folks bought at like 3 and 4 caps thinking they were going to take it to a 5.5 or a 6. And then all of a sudden, the rents went backwards and the debt is now like a 6.5 or a 7, maybe even higher. So there's no way out on some of those multi assets. And honestly, like to clarify, like there will be some. I mean, look, everybody says like industrial's the darling child of commercial real estate right now, and I think that it is. And obviously, anything can change. At the end of the day, at one point, shopping malls were the lowest cap rate, safest investments in the world, and now they're deemed archaic and very
Is
troublesome.
industrial so big because of the shipping needs for the Amazons of the world and just last mile shipping? Is that why industrial is so big, or why is it so big?
It's a combination of a few factors for sure. And I can start on, from a demand perspective, onshoring, kind of separating ourselves, our dependency on other countries, import exports like China. That leads to a lot of new manufacturing in the United States, whether that's EV or, Intel doing a new chip plant. That stuff is creating jobs and it's creating a lot of leasing momentum in the industrial sector. Step further, I would say, is just e-commerce. Obviously, during COVID, e-commerce was the big driver of industrial space. Amazon was gobbling up square
Yeah.
footage all over the country. And then when they go and give back 0.01% of their space or whatever it came to be, people thought there were blood in the streets, and it just wasn't the reality. It was just headlines. So, but I will say that the stuff that has pulled back, yeah, it is e-commerce oriented, but more so big box oriented. When you head into a recession, people are very cognizant of how much space they're taking up and what their occupancy costs are. And what I would say is, why we love, the momentum on the industrial side is because occupancy costs are just a fraction of what the overall, supply chain costs are for the tenant. Like their real estate's like 5% or something. Transportation's like 60. Labor's, whatever the breakdown is. I don't know it off the top of my head. I probably should. But it tells me that there's, if you can buy very well located real estate and you push rents, it's not as impactful because they're saving money on transportation, labor, gas, all that stuff. If they're in a better location that's closer proximity to the population, because that's typically who they're serving. And then a step further, and why I focus on South Florida and the population growth markets in the Sun Belt is because that's what drives, rooftops and population increases. That's what drives consumer demand on the smaller spaces, which is what I was alluding to earlier. That's the segment of industrial that's done extremely well, and there's very little new supply. And at the end of the day, real estate's a supply and demand.
Why is there so little new supply on it?
In that space, So the smaller you go, the more expensive it is to build. So it's just like it won't pencil. When you get
Got
to
it.
like 50,000 square feet, 100,000, 30,000 square feet, it's so expensive to build that it just won't pencil. So there's no new supply coming online. And when there's no new supply coming online in a certain, real estate category, it creates upward pressure on rents because the tenants have nowhere else to go. And it creates upward pressure on valuations. So that's why we like that strategy.
How many properties do you guys have?
I actually we've had four exits to institutional capital.
Shut up. Wait, no, no, no. You have not had four exits.
I mean, I haven't like exited my platform. I've had like four real estate exits.
No, that's what I mean.
Yeah.
Four real estate exits. Wait, dude, how long you been doing this for?
Uh,
3 years? 3 years?
no, two, a little, almost two and a
Yeah,
half years.
that's what I'm saying. So how have you
Well,
had
yeah, I'm
what?
trying to explain a couple of them. So they
I mean, you don't have to go. You don't have to. You can be very broad. Like you don't
yeah,
have to.
yeah, yeah. Well, look,
What I'm trying to understand is if you invested $1 million in a deal,
yeah.
do you get paid on that and you made money on it?
Yeah, I mean, look, a lot of the deals that I do are like, 95, 5. So I'll come up with like a few percent of the equity and I'll have an institutional investor put in most of the equity. And then, we'll run the deal from A to Z and, garner sweat equity, economics on the back end when we go and sell it. So we'll charge fees and promotes, which is, pretty market for taking on institutional capital. So yeah, you might put up like that's the thing like I'm not putting up a ton of money, but we're doing all the work. So that's why
Got it.
we're able to make multiples on our money because we're not putting up that much. And that's kind of how it has to be in the beginning. I started the company with like $200,000, and I'm only like now after these exits having liquidity to hire like really top tier talent. So it does take time to make money um, because the fees are just not that much. It's
So
really those exits.
so the four exits have allowed you to be able to grow the company, hire people. Now, do you still have properties in your portfolio? Well, I know you do, but
Yeah,
like,
yeah, yeah. Especially on some of the newer, like we just bought a couple assets. One that was like 30 million, one that was like 13 or 14. Um, with institutional capital, and just the values and the cap rates have gone up. Those two deals, like the first one we bought at like high sevens, and we were getting debt in the high fives. So it was pretty accretive. The second one we bought all cash. So and a lot of
you bought a $13 million all cash.
30, almost 30.
Oh, the third. Well, you bought that one all cash. You didn't
Yeah,
do any
yeah,
baby
we'll put
purchase.
that
No
on
baby.
it eventually, but you know, on some of these assets, you kind of have a decision to make whether it makes sense to put financing on it or not. It's one of those situations where sometimes in this environment, it makes sense to wait a little bit when there's some value add or some sort of business plan's been executed on. Um,
But but Tim, what you have done in, well, it's not a short amount of time, but because you worked at other places before, but in a short amount of time, Tim, you have um, gained the trust of investors to put up 30 million in cash to buy a property.
yeah, yeah, yeah. I
Because
mean,
that wasn't underwritten by a bank. I mean, because sometimes when investors invest, they're like, okay, well, we have the assurance that there's debt on it. The bank did the underwriting. You're saying in that scenario, there's no debt, so
yeah.
I mean, confident. That's confidence in you and your team, I guess, is what I'm
Yeah,
saying.
in the deal for sure. But we've got a really good team, and that I mean, look, that's the biggest part about growing a company is how talented are you, and how I've noticed like there to be just such a correlation is like the quality of talent that you get what you pay for at the end of the day. That's what I'm getting at. And I give away a significant amount of upside in my deals to the guys that work on the deals, so that they're highly incentivized from the day that they source the deal to the day that they work on it or develop it or asset management. Like everybody that works on a deal at my company takes part in the profits when we go to exit. And I think that that's important for investors to hear because anybody can source a deal and whatever happens happens. But when there's a bunch of folks working together and have a vested interest in the success
Yep.
of that exit, It's like when grew Benzinga. I'm sure there's people that you gave equity to,
Yep.
or and those guys
Totally.
work very hard. You know,
Yeah, totally incentivized too. So how many people do you have now?
and right now we're keeping it pretty tight. It's like 5 people. We're
That's great. No, but
in
I
this
know.
environment. That's what you need.
No, but by the way, you're
High
staying tight. Like
quality.
I know, but I know a REIT, a public REIT.
Yeah.
They're big billions. Okay, billions. They do the casino, the financing for the properties. Their whole company is probably like under 40 people, and they're billions because
You can
once
outsource a good amount of stuff.
yeah, and but also yeah, I mean you're not doing the maintenance on the building. I mean I mean you could outsource that. Like you're not having internal property managers going in. I mean you're not having people go in and fix I don't know the water supply. But have you? What is like your What's the one like horror story like that? You bought a property and like this thing fell apart. Any of these things like where you had to put out a fire right away and it was just like total
Yeah, just
mess.
delays with the cities, that's always challenging because you're trying to get a project done, and you're trying to you like when you go and buy a property, you lay out a timeline for your investor, like, hey, we're gonna
Yep.
get this done in X amount of time, and then there's certain things that are just beyond your control, and at the end of the day, you have to be able to live with things that are beyond your control, like the market shifting or the city not responding to you in a timely fashion, and just say to yourself and say to your investor, hey, I'm doing the best I can with what I've got. Like, it's not like you can't ding us for effort here. I mean, it's just certain things like that. Yeah, just project delays, stuff like that.
Yep.
That's always the most
So
disappointing
that
because
so that and
that's our biggest thing. Like, are you on time? Or are you on budget? And over time, you get better at being on time and on budget, but you do the best
so
you can.
so the one that you have the $30 million you bought for cash now, are you looking at bank financing or do you want to wait till interest rates fall? Like how would you look at that one?
Yeah, I mean, I think, it's a combination of executing on a business plan and, getting it to an attractive, stabilized yield, but also, at some point, you know, I don't think interest rates are going to be, north of 7 forever. So at some point, there's going to be a more creative financing solution, hopefully in the next few years. So TBD on that one. The stuff we're looking at right now, I mean, look, a lot of these deals, in this environment makes sense to go all cash, and I'll tell you why, because, you don't love negative leverage. You don't love buying something at a 5 cap and putting 7% financing on it unless there is a very, very clear path to getting it north of 7 cap, or, an 8 cap. So that's something that we always think about, especially on the new deals. What we're doing right now is, look, we've only partnered with larger institutional investors, and I think we're gonna, this is gonna be the year that we start to diversify our capital sources and open our deals up to family offices and private capital. And I think it's the right thing to do. Like, we shouldn't be totally dependent on groups that only want to do big deals, because in this kind of environment, like, the outsized yields and the best deals seem to be the smaller ones, because there's less eyes on them. There's less low cost of capital groups that are buying them, So what we're trying to do is aggregate a portfolio of them and then sell them to like a Blackstone or a Brookfield, or, someone that's got a lower cost of capital than us. So pool it together, maybe with some family offices, a series of smaller assets, and then sell to a larger check writer who's got a lower cost of capital that we can get enhanced returns from.
Got it. Makes sense. What's the hardest thing you have to do for your business?
Um, Man, that's a really good question. That'll make you think. Hardest thing that I have to do, it's managing people. It's like I transitioned from like being a deal guy to like a guy that now owns a company, and I think that that's the biggest thing is knowing what you know and knowing what you don't know. Knowing what you don't know is so important, because when you go from, look, I think when you started your company, you were probably very good at like one or two things, and then like okay, and at a bunch of other things that you're going to need to hire people for, and that's how I kind of looked at it. Like I got a deal background and I can raise capital, but I cannot execute. I did not have this crazy construction background or development background, where I could bid stuff out with GCs and do all this, the super
Yep.
technical stuff. So I had to hire for that and solve for it over time as my liquidity increased. So I would say it's just, going from, having this being a one track pony or one trick pony to now like running a company where you have to be cognizant of execution, managing folks, managing capital, and managing outreach because that's a big part of it. It's really like bringing in the deals as a sales role. So setting up the standard operating procedures for that. And thank God I have a really good deal sourcing background. So we have a very rigorous acquisition and outreach strategy that's always caused us to be attractive to really competitive capital sources because we've got good deals.
So when you made these hires, was it all word of mouth or did you put job ads up?
I put job ads up, you know, yeah, on LinkedIn.
They work?
Yeah, it did on LinkedIn and then select leaders. Yeah.
Select leaders. I don't know that one. That's
It's
another
like a
job
real
site.
estate specific job board. Yeah.
Is it real estate focus or just leaders in general?
It's just real estate focused. It's called Select Leaders. It's
Yeah.
good for, yeah, just real estate specific roles. There's good talent on there, but LinkedIn is great.
Yeah. Microsoft got that for a steal. When they LinkedIn, if they would have kept that,
Microsoft
it,
is in M&A
it,
mode right now. They just bought Activision.
yeah, and they bought LinkedIn way, I mean, like 64 years ago, and they got that's when I should have bought Microsoft stock. So I did ask you about interest rates, and you said you gave a reason, but like if interest, let's just pretend interest rates stay at this high rate for the next 2 years, okay?
Yep.
I understand because of cap rates or the value, but over time, so let's say rates fall again in 2 years, okay? Let's just say 2 years, your deals start to become way more valuable. Like I guess my feeling is interest rates are higher. So if you don't have access to cash and you need bank loans, you have to need bank loans. You're not buying right now. And so I feel like it would open opportunities for people that can buy, like a Blackstone, like a you. Am I right on that? Because um, that's my thinking. I just don't know if that's true.
Yeah, I mean, look, like the guys that killed it the most were the ones that were buying in 2008, 9, 10, 11, 12.
That's true.
So
That's true.
we see it as a generational buying opportunity right now. The bar is very high for us right now, I would say. Like it needs to be totally outsized deal, totally
Got it.
abnormal returns than what we were seeing on the same assets 6 to 12 months ago, and even a month ago. Once people, I'd say the last Fed meeting when folks came to the conclusion that rates were going to be higher for longer, that's when we started to see another drop in values, and we started to adjust our underwriting. And that's just kind of the. It's not like we're trying to go out there and steal stuff, from unsophisticated sellers. Like we're just paying a market clearing price in real time, and just like everybody else. But I think at the end of the day, like you said, if you've got creative capital solutions where you can be active, in
Yep.
the next couple of years, quote unquote, probably at the bottom. And what I say is like, look, I can't time the bottom, but if we're buying stuff that's 20 to 30% off, from the peaks, like industrial is only going to fall so much, especially if
Yep.
tenant demand hasn't come down. I mean, where people are seeing office like 50, 60, 70% discount for, it's a different world. And, at the end of the day, that's still a little bit of a falling knife. Like if we start to see a big uptick in vacancy, like I think if all of the square footage that goes, that's under construction right now goes unleased in industrial, we're at like 5% vacant nationally. So think about that, and that's a healthy vacancy rate.
No, that's crazy. That means that you're set up for a long term successful story here with where the market is. It's not like office where people want to work from home. Industrial, you need the space. You need the space like that. You just absolutely need the space. There was
Business.
two more quick questions. Okay, I had what was your worst or your first job? I'll switch to that, and then I'll see if I remember the other one. Your worst or your first job?
Oh my
So
god,
it's a question we ask on every
this is
podcast. So
really funny. Actually,
it's either your
that
worst
I
or your first. So,
neglected to tell.
and by the way, it was just Tim Bishop with Iconic Equities Group.
So something that I neglected to tell you, okay, was before I got the job at Merrill Lynch. I had just moved to South Florida and I took a job, or no, I didn't take a job. I interviewed
It,
for a job.
it wasn't working for Nick, was it?
It was not working for Nick Smith. No, I hadn't met Nick till a few years later. I interviewed for a job and it was like B2B, like sales. Okay. It was very, very vague. Okay. I go in, everybody's in suits and ties. So I was like, wow, this is a pretty sharp shop. And they're like, yeah, it's B2B sales, like, and I don't know any of this stuff. I just graduated college like 6 months ago. So I didn't know any of the lingo. Like I took a marketing class, like I had a liberal arts background. Basically I go in and it's like rigorous interview, like process. It's like 2-3 rounds. So I'm like telling my dad, I'm like, man, I'm showing up with a suit every day. It's like 2 to 3 rounds of interviews. Like this is a pretty serious job. It's salary and commission. It's like got health benefits. Like it's the real thing. And when you're like just coming out of college and you're not like recruited by Bain and Goldman Sachs, like you have no idea like what's legit and what's not. So they were like, okay, it's the third interview, and now you're going to shadow people for a day. And I go
I
in,
think I know where this is going.
I go in and shadow them, and we're selling. I don't know if we can curse on the show, but we're
You
selling
can show. You can say.
we're selling fucking paper door to door. All right, we're selling like office supplies door to door. I was so mortified, and I just could not do it. Like, I mean, we were going to like law firm, like, hey, you guys need paper? Hey, you need, and that was my day. I called, like, by the way, like right before this, they basically told me I had the job, and this was kind of the first day. I called my dad, and I was like, Dad, I got the job. And my dad was like crying on the phone and was like, I'm so proud of you. Like, I would have been proud of you even if you didn't get the job. And is like one of those moments. Like my dad's kind of sick now, and like it's one of those moments that I look down on, and I'm like, wow, like like you really didn't know what you don't know, and it's like comical, like how far I've come since that moment. But I love that I have those experiences, um, because it just makes it that much sweeter when things go well. I have perspective. Because I've been on the verge of bankruptcy. I've gone through really difficult times, and I was speaking at University of Chicago last week, and I told the kids, I was like, you grow the most and you gain the most perspective when you have the biggest setbacks. So you got to be thankful for the setbacks. You got to be thankful for the bad experiences that happen to you, because at the end of the day, that's when you grow the most. So I'm happy that I almost sold paper door to door. I'm proud that I was making $12 an hour at Merrill Lynch, because you know what, I wound up in a good place, eventually, and I needed to experience all those setbacks.
How embarrassed were you when you went into those offices?
I can't even explain to you how tight my stomach was and how mortified I was. People were like, "Get the hell out of my office!" Like, what the hell are you doing here? Like, I was like, "What are we?" I couldn't believe it. I was like, "How does this girl do this
Okay.
every day?"
All right. So I just have to interject myself into this one. I was one summer. I'm trying to get a job over the summer. See an ad in the paper. I go for the interviews. This guy in the office doing the interview, and he like, yeah, you're like, does the same kind of thing, same kind of interview process. So I go with this guy. He has a bag of basically shit. Okay, like a bag of like tchotchkes, like hairspray, and or like just random shit. Okay, so we go out, we drive. I drive with him. We go to some area because he goes, "Oh yeah, you're a." Because I said to the guy, "I want to be your top salesperson." I didn't know what it was, so we go and knock on like like we went literally to like a manicure salon, and like then we went somewhere else and like this retail stores, and
B2B
it would
sales, baby.
and it would say, wait, hold on. It would say B2B sales. Yes. It would say no solicitors. So on the sticker thing, I'll never forget this guy. He said no solicitors. He knocks on the door, goes in there, and the lady's like, she said no solicitors. And he goes, oh, I thought it said no Sicilians. And the lady thought it was so funny. And so then she like bought for him. It was the most embarrassing thing ever. We were walking on the street with a bag. I swear,
By the way,
one day.
I will say, like, if you can sell there, it's like
Yeah.
go hang out in the Diamond District, and I promise you, you can raise capital or
Yeah. Yeah.
acquire
Well,
acquire real estate because if you can do that, like, you are a salesman, my friend. Like, you can
well,
sell, you can raise, you can do anything.
Howard Schultz, founder of Starbucks, he sold copiers door to door for 2 years. I read it in his book, and I agree with you. I mean, at the end of the day, you're always selling. You're always selling. Like I
So,
met you randomly with another friend. I guess we're selling each other. Like, hey, I'm a friendly person. Like that's what you're always selling in some way. But yeah, that door to door, like, I mean, oh my God, you went through that. Now you did mention your dad, and he was just so proud of you. Got that role, which I know in hindsight, the role is, you're looking back now, you get to laugh at it. What are your parents or what is your dad meant to your career, your life, and where you're at today?
it's a really good question. So, um, yeah, so my dad's upper middle class kind of guy, works in corporate finance. Always like not an entrepreneurial guy, but more like a corporate guy. But super self sacrificing. I mean, as you could tell when he bailed me out, like he didn't even have the money. They'll take a loan out from his 401k, and that's not because he didn't do well financially. It was because he paid for all of us to go to like private schools, which was like hundreds and hundreds of thousands of dollars, in student loans and all that.
I know. I
So
know.
yeah, I mean, he's always been there for me. And a couple years ago, I found out he's got like lung disease, and that's been tough because I don't know. I've never really dealt with like illness in the family, and it's pretty serious. And I'm trying to like do as much stuff with him as possible. I think it'll be all right. It could be a 10, 20 year thing. It could be a couple. You have no anybody can get hit crossing the street today. So you
Yep.
can't really focus on you really got to live in the day. And so I've been going to all these cool sporting events. I know you would like this. So last week, I take him out to Notre Dame. We're huge Notre Dame fans, by the way.
You ever see the movie Rudy?
Of course, of course.
Okay.
It's like it's my life. I love it.
I met the real Rudy when the movie came out. I only saw it once at the time. It was when I was leaving golf camp. I was 16 years old, and the guy went into Blimpie to get subs, and we were in the van on the way to the airport. And the guy goes, "That's the real Rudy in the car." I'm like, "No, it's not." And then he like showed me the photos in the book. So I met the real Rudy when I was like 16.
I love Rudy.
Me too.
I'm an underdog. I relate to the underdog story. Love Notre Dame. Went out to a game. My dad hadn't been there in 20 years probably, and they ended up upsetting USC. I bought him some seats. They were amazing. They're super.
When he walked in the thing and saw the field, did he have the same reaction as that father?
It was
Like,
like his most beautiful sight these eyes have ever seen. Yeah, that's what
there you go.
my
Thank you.
dad. Yeah, when he sat down, my dad was like on the verge of tears. By the way, he was like, "He's amazing. Thank you so much."
So that's an iconic movie line, iconic, and that's what your dad. Yeah,
And by the way, then they smoke USC, and we storm the field. We
oh, shut up!
storming. My
Really?
dad's got
Oh,
lung
that's
disease.
fucking
My dad's
awesome.
got
That's
lung disease. I have a video of him
oh
running
my
down the field.
fuck you. That's amazing. I'm loving the swearing, but that
And
is freaking
by the
amazing.
way, we go home, and he almost starts crying, and he's like, "This is one of the best nights of my life." And I'm just like, "Oh my god! Like, how cool is my life at this point?" Like,
No, that's what this is about, man. Like you mentioned my sports, but this isn't about. Look at the experiences you had with your dad. Now look how many more experiences you're gonna have with your dad. Like that's what this is about. Like this is about that. It's not about
well, you probably
to
play
me.
these games with your kids. It's
That's to me. That's exactly what it's about, man. You just told the story about at the game and tears, but then he goes home and it's the greatest day of my life. Like that's what this is about to me. Like that's I don't post all of my stuff to Instagram. I know I post some, but decent amount. But I love looking back at the stuff. I'm the guy. The stuff I get the alerts from 4 years ago, 5 years ago, and share it because that's what this stuff is about. And I think of experiences. And yes, you want to work and do well and be nice to people and enjoy, But like I'm not out there clubbing and spending money that way and buying bottles. Like I'm not saying it's not you don't shouldn't go to clubs ever. I'm just saying to me like having those wholesome experiences like you have with your dad, like that Notre Dame, like that is awesome. And you ran, and then you, it's like you wrote a movie script. It's like you did.
Oh,
You ran on the field.
they
They,
almost
I mean,
carry him out. You know, in the beginning, and when they were like, "This is the last player that's ever been carried out," they almost carried. He almost had to get carried out.
there
I
you
was
go.
worried
Like
about him getting out of there. There was like 30,000 people on the field. I was like, "This guy's got lung disease. What if he just kills over?" I'm like, "This is nuts."
this is gonna be an interesting way to end. I
They
mean,
have to carry him
yeah.
out.
Yeah, that's it. No, but that's what it's about, Tim. And that's, you've taken the entrepreneurial, the entrepreneurial road. You went and started your own company. I remember talking to you about it and where you've brought it. I mean, 4 exits. And I know you said they're not huge, but you're buying $30 million deals. You've done it. I mean, I remember you talking to me about it. This was before I did my deal. So didn't really, I was robbing Peter to pay Paul kind of thing. And I mean, we're always doing that in some respect. You're always trying to, hit this month's numbers and all that. But it's amazing what you've done. And what the only advice I have, just being a little older, is don't go chase the next guy. Like do your thing. That's like when I see people get in trouble, it's when they go chase the next guy. I'm saying even when you make your exits, like everyone's like, oh, that person has that Ferrari. It's like doesn't matter. It's like you enjoy like what you do with your dad, your experiences, your friends. Like that's what it's freaking about. That's what's so fun. Like honestly, the day I met you, hanging out at where we met at that pool, hanging out there with like a bunch of the guys, that's fun. You know, just chilling. And so doing this was fun. Learning more about you. I mean, I had no idea you were selling door to door for a day, working at Merrill, 6 months, no sales. Like I always just thought, honestly, I just always thought you were a badass. And we all have that. We all like, I mean, an outsider always best. No one remembers like I made calls for 6 months and no sales. But that is what makes you successful now. That is the gold that people don't realize. Like that stuff you did then makes you what you are today because you appreciate that much more and you realize how lucky you are to be able to learn this stuff. And I love the respect you pay to your previous boss. I mean, you said that company changed your life, and that's awesome.
Yeah,
So thank you for coming on the Raz Report. I know we went longer than I was supposed to, but you got a lot to say.
you're the best.
You got a
Thank
lot
you
to
so
say.
much.
Thank you.